G'day everyone, welcome back to Risk Biscuits. My name's Michael. Thanks for coming back to the show. If you enjoy the show, please like and subscribe. We're just a kind of a news show. We're an evolving format. We're just kind of winging it, to be honest. At the moment, we're just interviewing various traders, people that we've met. Got some interesting stories, some interesting ideas, different backgrounds. Just having a bit of a chat and trying to keep it a little bit low key and fun. Today I've got a special guest, Liquidity Goblin, who many of you will know from Twitter. One of the guru crypto guys on Twitter. G'day, mate. How are you?
I'm good. I'm good. How are you?
Yeah, cool. Love the mask, by the way. That's awesome.
Thank you. It's my regular attire.
Before we get started, I'll just share something on the screen just to kind of cover off on the bases. Here's just a bit of a disclaimer. So obviously this is, really just entertainment purposes, general information. Like I'm drinking a beer, the other fellow's wearing a mask. So please don't take anything we say seriously. It's not financial advice. It's just a couple of guys having a chat on the internet. And to kind of sum up where I come from in terms of, my knowledge and how much stock you should put in what I say, it's probably a good place to be. So, yeah, as I say, just having a bit of fun. If you want financial advice, go somewhere else for it. All right. So now that we've got the formalities out of the way, let's get into it. So Liquidity Goblin, well, maybe I'll just kind of start with what I think I know about you, and you can kind of tell me if that's, right or wrong or whatever. So you're obviously a trader. We'll have a bit of a chat a bit later on about sort of how that's evolved and that sort of thing. But at the moment, you're primarily in the crypto space, making markets, that sort of thing, doing some interesting stuff in crypto, which I'll be honest isn't sort of a strong suit of mine. Working with a small firm in Australia. Is that kind of a fair assessment?
Yeah, yeah,
Yeah,
definitely.
yeah, cool. Okay, so and obviously, we're trying to keep this anonymous, so I won't sort of get into too much detail around all of that. So really, I guess just kind of starting at the beginning, like your kind of origin story, for lack of a better word. So kind of what got you into trading? What are what was the interest that sort of sparked this whole career, and we'll go from there.
Yeah, I think I sort of fell into trading more than anything. I fell in love with data science whilst I was at uni, and I was working in a small team working on artificial intelligence. And so that was actually on medical applications and working on jet engines.
Yeah,
Um,
cool.
and then one of my university tutors asked me if I was looking for a grad job, at which point I wasn't. I was still studying, and he was working at a options market making firm down in Sydney. Um, and I said I'd be interested in an internship. I've got to get some engineering hours in, and I went down and really enjoyed it. So I postponed the next semester of my studies and worked there full time for a good 8 month stretch, and then continued working there until I finished my degree, doing part time quant work,
Yeah,
um,
cool.
and then became full time after that. Just sort of from there, got obsessed with trading.
Yeah, right. And so that was obviously more in like traditional finance, like a traditional options market making.
Yeah, I started in Hong Kong markets, so Hong Kong index options. So that would have been around about, I think, 2018. Um, I started end of 2018. And over 2018 to early 2020, it was quite an interesting market to be trading. We had the executive orders and the China trade wars, and then
Yeah, of
COVID,
course. Yep.
the very early days of COVID. So I was watching COVID sort of December, January of 2020. Um, I wasn't really a trader at that point. I was more quant work. But then after that, I transitioned to being a trader on Delta One stuff in Japan.
Yeah,
So,
cool. And then what made the leap from TradFi to crypto, and when did that sort of come about?
so I was 8 months into being an ETF market maker in Japan, and I presented some, and I was watching crypto just on my personal account. I had some friends that were doing MEV, minor extractable value. So like flash loan arbitrages, the like stuff on chain, just buying low on one exchange, selling high on another exchange, but doing it atomically. And I was like, surely I can do this. And I presented it to my boss, and then my boss presented his boss, and it went all the way up the chain. And they're like, do it. And so
Yeah, cool.
I did it there, and it it went way better than I was expecting. And then ended up through a really roundabout way doing it myself eventually. So here I am as running a firm as a co-founder, doing it for myself. But we're sort of many other strategies we do now, obviously more market making than MEV.
Yeah, okay. And then so, like obviously like not only the products that you're trading, but the type of trading that you do has evolved over time. What's kind of, I guess, driven that sort of iterative process, and what sort of attracted you a bit around what you're doing now versus what you've done in the past?
For sure. I guess it will start with why I thought I could leave and did leave. It started with a bad business decision on my part when I was offered investment from someone who obviously heard how much we were making at the firm I was at. I was like, I reckon you could do it for us, and threw some money at me. Um, and these were crypto guys, and obviously probably a bit naive of me, and it didn't end so well. But the point was that I thought I could do it on relatively little capital. And so I was at this big firm. There was issues of compliance around crypto, obviously, that big firms don't like, the wild west of crypto.
Yep.
And also there wasn't really any benefit to having tens of millions of dollars under my belt. We were doing this all with like a couple $100,000 of capital. And so I thought, well, I could do this without them. And so every strategy from there has sort of been what's the best return on my capital I could do. And so as we've sort of saturated the smaller stuff, we started with doing stuff where we maybe turn 20K into 50K, which is great return on capital here and there, but they're
Yep.
sort of edge dies, and we're just going to little strategies like that we're just hammering away little edges constantly, bringing in revenue. But all of these opportunities are very fleeting. And now we have more capital underneath us. We've got to sort of deploy that and try and get the best returns we can on those. And that's sort of settled in HFT, market making, and the likes. Is very greedy in the approach to what we're choosing to do. It's something systematic with good sharp that we can get the best return on capital that we have on. And right now that is market making.
Yeah, okay, cool. So just for people who don't know and probably don't understand the lingo, so can you just kind of explain a little bit what market making is and what high frequency trading is, and sort of how that sort of works practically?
For sure. So I think probably what would surprise a lot of people is how simple it really is. There's a lot of complexity to it, but the strategy itself is very simple. But being good at it is about being fast and having a bit of predictive capability as well on the market making side. But for the HFT, it is on new information. We think there's a high chance that it's going to go up or down based on something that's just come across the feed, and we will just buy or sell according to that. And so that, in its simplest form, is just a linear regression on maybe an order insert over a certain size or a trade over a certain size. So if some big trade happens on Binance, which is the most liquid crypto spot exchange, we will then rush to buy that same token on all the other exchanges.
Gotcha. Yep. Okay.
Very, very simple strategy, but the key to success is, being fast enough to get them. So that's the tricky bit, is just writing fast code. But
Yep.
And then same with market making. I like to think we're the like used car dealer of crypto.
Okay.
We'll buy. That's what market making is. We'll buy a bunch of tokens, we'll sit on them, and we'll sell them. Obviously, the turnover rate is much faster than a used car dealership, but we will make a price, a bid, which is some way under what maybe the fair value is, and we'll try and sell it for a little bit over what the fair value is. And the way we make money is by turning over as much as possible. So
Yeah. Okay. Yep. So small returns, high frequency, turning over lots of transactions during the day.
yeah, so like for a rough scale, we look to at the moment turn over 3 to 4 times the capital we've allocated to each strategy in market making per day.
Okay. Yep.
So if
All right.
if we've got $1 million there, we're doing $4 million volume. So in terms of inventory turnover,
Yeah, sure. Yep. Okay. And then is that the speed of sort of reacting to your signal? Is that all in code, and is the actual trading automated, or are you doing that manually?
yeah, it's all fully automated. So it's
Okay.
all built in-house. So in my undergrad degree was software engineering, and there's four others of us here that all did either maths or engineering of those.
Yeah, cool.
And that's what we do all day is write code.
Yeah, right. Okay. So the model's just running in the background, the machines are just on, and they're doing what they're doing, and you're just monitoring it from time to time and seeing what the outcome is.
Yeah, yeah. So most of the analysis is what we call post-trade analysis. Seeing trades that we missed is usually where we spend most of our time, not on trades we did do. And then sometimes if we see a really bad trade that comes along, we've got to try and figure out why we did it. But most of the time it's just trying to win the good trades, and not take the bad trades. Is as simple as
Yeah.
it is. But
Okay. Yeah, cool. All right, that makes sense. That is simpler than it sounds from time to time. Okay, so I guess given that that's sort of what you're doing in the market, you're obviously kind of, market neutral and agnostic and don't particularly have an opinion one way or the other, which is I guess, quite different to a lot of other investors that are either, long only, long short, taking some sort of directional bet, um, in terms of, the underlying coin or stock or index, whatever it might be. So just kind of in general terms, like how do you kind of think about the market? Like what is the market to you being a market maker, I guess, and compared to how someone like myself or some other counterparty might think about it? That makes sense.
yeah, I I tend to think of it. I think a lot of people will think of like as an investor, maybe think from a game theory perspective of it's sort of a game against nature. There is the market, and they're sort of trying to beat this big group of people. Whereas as a market maker, we're sort of thinking a little more individualistic. We want to know what each different type of counterparty is thinking and doing, and because we have at the end of the day, someone's on the end of each trade that we're making. We're making a lot of them, and we want to know. Sometimes we'll see a trade that like looks really good, and we're like, does he know something we don't? They've just paid us quite a big spread to do a very large trade. Is that toxic, or is it just someone in crypto either getting liquidated or just doesn't know how to execute?
Yep.
And there's a lot of that paranoia of does this guy know something, especially in crypto where it's a bit of a wild west and insider trading is rife, right? Um,
Yep.
we worry that this one guy might know something. They're friends with an insider at the team that of that project or whatever. So instead of thinking of the market as this sort of single omnipotent thing, we sort of think of it as a group of people, and we want to try and chase the people that we think are less informed than us and run out as far away as we can get from people that are more informed than us. Um,
Yeah. Okay.
and we can't do that perfectly, so it's a balancing game. Um, Sort of trying to hammer out edges where we find there's lots of uninformed flow and avoid places like where there's lots of toxic flow.
Yeah. Okay. Yeah, that makes sense. And then are you kind of gathering that it's insight primarily like through your code and your algorithm? Like, you're not sort of obviously monitoring transaction by transaction, or is there?
We
Uh,
do monitor by transaction by transaction. It is like the way we look at it is real simple, really. We take a trade and the price it traded at, and then we mark that out to different time scales in the future. So only after some time can we sort of tell whether that was good or bad trade. So
yep.
we would look at what the P&L of that trade is 5 seconds in the future, marked to just the mid price, 10 seconds, and then a minute, 5 minutes, whole day. We don't go beyond a day, but
Okay. Yep.
and then if it's positive on all of those metrics, and it was this single big trade, and most of the other flow now wasn't necessarily the same. So when things are trending, they'll all have good P&L markets. But
Yeah. Okay.
so if we saw this one trade and then all of a sudden that it's got a great mark out, we'll start to ask questions,
Yep.
and try and avoid stuff like that. And those happen a lot. We we tend to either just try not quote there or avoid that token, or look into maybe some information that they're seeing faster than us. Like maybe they're following a certain Twitter account that has news, and we're missing all
Yeah.
these
Okay.
news trades.
Yeah,
things like
okay.
that.
Interesting. So then how does that kind of work in terms of the markets that you're targeting? So I guess, well, not the markets, but the coins or the tokens that you're willing to participate in. How are you sort of getting to the point where you're saying, well, I'm prepared to make markets in XYZ today that I wasn't prepared to make markets in previously?
Yeah. So we sort of broadly have some what we call market quality metrics,
Yep.
which sort of we want to be doing in there's like a scale of competitiveness and also a scale of volume. So if there's a lot of volume in this market and it's not competitive, that's the best case scenario.
Yep. Okay. Yep.
But in between these sort of two extremes where it's really competitive and not a lot of volume and vice versa, there's our equilibrium that we sort of set based on a few metrics like average spread, turnover, whether something's trending or not trending, average pay through rate, so like how much spread, how many levels is the average trade paying through, what's the average order size, how balanced is the flow, things like that. We're trying
Yep.
to see, and we see, oh well, that looks like we could make money market making that because we think we could be competitive there without losing too much edge. Whereas if you look at something like market making Bitcoin, we don't do that flat out because it's just not worth it for the amount of money we have.
Yeah. Okay. Yep. So on average, like how many markets would you be making at any one time?
At the moment, we've stripped that down to like two or three, sort of just
Okay.
hammer the good ones. But it could be 20
Yep. Okay.
in terms of capability. But it's a discussion we have a lot, I guess, is the point.
Yeah. Okay. And obviously, if depending on how good you think the edge is in that particular market, you're going to scale it up or down accordingly.
Yeah, it's a classic breadth versus depth question, I
Yeah.
guess.
Yeah. Yeah. Fair enough. Cool. Okay. So, and you're doing that all in the underlying tokens, or are you doing anything in the option space as well? Or
Yeah, so we're in the option space. We actually do a lot of our volume in perpetuals, mainly because the flow there is less toxic.
hmm
There's a lot of degenerate gamblers. There's a lot more degenerate gamblers in the perps than there is in spot,
Yep. Fair enough.
like significantly more. And obviously because people have leverage, it amplifies that. So
Yeah. Okay. Yeah.
it's pretty good. It's good for us. And there's liquidations and there's all these other fun things that are going on. But we in the last few months started options market making.
Okay.
So that's sort of just coming back, I guess, a bit full circles. That's going rather than this sort of route into a bit more Wild West. It's a bit more, the kind of flow there is more institutional, small funds. We're trying, it's our responding to requests for quotes and doing some OTC deals. It's far more traditional finance esque, and there's a lot of people that are making these trades are people that are ex traditional finance, working at hedge funds, or like that are getting some crypto exposure on their books. There's a lot of talk with the BTC ETF coming out, and there's also there's a lot of hedging flow from very large crypto like BTC miners and the like. So it's a bit of a move back towards what I was doing on like Hong Kong markets back when I first started in trading. And
Yeah.
I'm sort
Okay.
of applying stuff I learned there um, to just do it in crypto because it is fundamentally less efficient, right? So I feel like
Yeah.
if I could make Hong Kong work, I could make crypto work.
Yeah. And that's it. Like I don't really play in the crypto space at all. Um, yeah, I mean, I've dabbled in it, but it's just not my thing. But you obviously in the crypto world, there's a lot of people that are just sort of degenerately gambling and that sort of thing. But there's also a lot of people with a lot of um, high level skills and experience like yourself that are, I guess, taking advantage of the fact that the market itself's more inefficient. Comes with a whole series of risks that you don't have in traditional finance, and you're able to exploit that to an extent.
Yeah, I think the thing that maybe a lot of people overlook is there are a lot of traditional markets that we probably could trade theoretically as far as like technical capability,
Yep.
and that are inefficient. You know, you've got emerging markets, you've got commodity markets. There's a lot of spaces to play in that I think maybe this is overconfident that I could compete in, mainly because we've done it before.
Yep.
The main difference is market access. In crypto, I
Okay.
could just create an account, I get an API, and I'm ready to go, right? And the fee tiers, you're a few Telegram messages away from getting a market making agreement.
Yeah.
Whereas if I wanted to do that on Hong Kong options, I've got to have, you know, business agreements. I've got to have a clearing broker. There's like all these extra personnel that I need. I need a compliance team. I need legal advice. There's this big upfront cost for market
Yep.
access to compete in market making. Whereas in crypto, I could start with it's much more scalable, the business case. That I could
Yeah.
justify the business case to market make on maybe $100,000. Whereas you'd need to sink a few $1,000,000 to even get anywhere in a traditional market. And
Yeah.
that's the main driver, is just, it's
Yeah.
far more scalable.
That makes sense. Yeah. And in a lot of ways that's really attractive. Which is why I guess people like yourself are playing in the space. So how do you sort of counterbalance that with the fact that obviously because it's unregulated, it's a wild west, we had this FTX thing and various other blow ups from time to time, a lot of sort of really dodgy stuff that happens in the market. Um, I guess obviously, you're being rewarded for the extra risk that you take, but how do you kind of manage that and think about that?
Yeah, it is really tricky. I think people have become a lot more aware. Markets have become, other than FTX was a really inefficient market, but the rest of the crypto market has become less efficient since.
Okay.
And you can think of that in two ways. It's both some people leaving, but it's also because there's people have repriced exchange risk. So markets are less efficient because people think have reevaluated that the probability of them losing money there is higher than it was previously, and so you're now getting compensated for taking that risk. And there is no way to mitigate it and to spread across all of them, but there is, even then, there's many like diversifying doesn't really work to some extent, other than avoiding very specific bankruptcy blowouts of one exchange. But if all of a sudden government regulation comes down on all of them, then you're going to get hit on all of them.
Yeah.
Or if the whole market tanks, you're going to get hit on all of them. So there's a lot of risk you can't escape. But the way, I guess, we approach is we sort of try our best to come up with a rough number of what the risk is, and that sort of puts us ahead of everyone else. We don't have to be doing something perfect. We just have to be doing a little bit of a better job than everyone else, and then hopefully we'll just be the least worst off.
Yeah. Okay.
It's the best we can do, is, I think, reasonably.
Yeah. You can't mitigate all that risk, or otherwise there'd be no opportunity there, I guess.
Yeah, to bring in like a little bit of my previous engineering experience, it's insofar as it's reasonably practicable to manage the risk is what we can do. And that is kind of, there's only so much you can do. Even with financial instruments, we can't hedge it away, because then you've still got the counterparty risk of wherever you hedge that.
Yeah.
Unless you want to go to the CME and do some kind of, or pick some large investment bank who's going to offer you some swap on, the bankruptcy rate of crypto exchanges. I'm sure they'll price it very high. So
Yeah. Yeah. The insurance will be so good it won't be worth it.
yeah.
Um, so then how do you, as a firm, you're obviously making all these markets, you're carrying various inventory, admittedly with a, relatively high turnover rate. But how do you kind of think about the firm's, I guess, total capital and portfolio construction and sort of managing risk within the business, if that makes sense?
Yeah, it's something I think about and we talk about quite a lot. The ideal situation is to have, uncorrelated strategies. So when they're not all gonna hit the, shit's not gonna hit the fan all at once, is what you
Yep.
want to avoid. Because we take, our business is taking risk. We're in the business of taking risk. So
Yep.
we expect down days, we expect variance. So hopefully we try and come up with things that are uncorrelated. And we are seeing that with volatility versus spot stuff. Well, options versus spot is quite a nice uncorrelated, at least as far as our P&L. That might be because we're better at doing one than the other. But we also, there's that whole meme of the Alameda guys that they used to talk about, just get long before the market pumps. I do kind of still believe that. So we have some long ETH exposure.
Okay.
And I still, yeah, there's a few ways I think about that. But I think, if you look at the number of people that have made a bunch of money from crypto, it's not from doing fancy options market making stuff. They
No.
were long ETH, long Bitcoin, made a bunch of money. In fact, on my personal account, my best investment I've ever made was buying ETH below $500.
Yep.
It's just performed well, held on to it. It's great. Yeah.
Yep.
But one of the main benefits is volumes tick up more when people are fearful than they are when they're greedy.
Okay. Yep.
So market making is super profitable because spreads go wider, volume goes up, people make panic judgments on down days. And so our market making and HFT P&L rockets on those days, right?
Okay. Yep.
But on the other days, it ticks along. It doesn't necessarily, we're not like the top dominant market maker. We're picking up scraps behind the big guys, is sort of the best way of seeing what we do. So it makes income, but it's nothing to write home about. Some days it's under what our average burn rate on salary is, right?
Yep.
But if ETH is ticking along going up, and then the days that the market tanks, we make a fuck ton on
The options and the market making.
on our other strategies, then it's sort of like together, the sum of them actually works out quite well.
Yeah. Okay. Yeah. I mean, that's kind of like the golden goose that you're sort of aiming for, even in the trading that I do, you're obviously looking for uncorrelated assets and,
Yeah.
wanting them to at least, do well when the others aren't and vice versa. Certainly reduces volatility, which is good. And so how do you, I guess the bit that I struggle with in terms of crypto and I think, partly it's my age to be honest, like it was sort of invented, when I was already probably, I don't know, or like Bitcoin and that sort of stuff sort of became a thing when I was sort of in my early 20s and I just sort of missed it, I guess, for lack of a better word. And then obviously there's this sort of generation that's flowed behind that's obviously much more engaged, much more of a believer around the utility of various tokens and that sort of thing. And you can have a philosophical debate around whether or not, crypto is a good or a bad thing. But I guess where do you kind of sit on that idea in terms of like, does crypto have any utility in the long term, or is it just this kind of thing that's been created for gambling and you're exploiting that? That makes sense.
Yeah, I think the latter. I think
I
because
love the honesty.
we're on the coal face that I'm particularly jaded about the whole thing. We make our money from the most degenerate gamblers, right? Like that's how we make
Yeah.
our money. And so it is just to us, it's a casino, and we want to be the bookies. That's
Okay.
I
Yep.
don't believe in the tech really at all. I think it's a solution looking for a problem.
Yep. Okay.
Bitcoin makes no sense, uses too much energy. Ethereum is cool, but I still think it doesn't really have a tractable use case. I am big on, I do hate the government a bit, especially in Australia with the whole housing bubble thing.
Yep.
Being someone young enough that not to have that uplift in the net worth from owning a home. So I like the censorship resistance. I like privacy. So those are things that I probably align with, but I don't think they're achieving that because you still, at the end of the day, have to get in and get out of crypto. And so the government can still be like, nah, we don't like you using this. It doesn't achieve much. I do like the use case where, people are using Tether on to transact in countries that have uh, hyperinflation, places
Yep.
like South America and countries in the Middle East. Um, like that's a very clear use case of, there's no government involved. People can get access to US dollar equivalent, and it works for them.
Yep.
That's a cool use case, and I agree broadly with that's something that works. But that's like such a small portion of what crypto is.
Yeah. Yeah.
You know, um, that I just think most of it's vaporware.
Yeah. Yeah. And fair enough. I mean, to me, it is like I don't understand it, and as you say, to me, it just sort of feels like a casino that's been created for people that can't go to the casino, or want to go to the casino at home, and whatever. At some point in time, it'll either become something more usable and of higher value, or it'll just become a regulated gambling operation.
Yeah,
Who knows?
there's the main leading maybe tractable use case that a lot of governments are going with is this CBDC, central bank digital currency.
Yep.
And philosophically, I'm really against them. It just increases surveillance, right? Like you've got the blockchain is great because it's got every transaction history. You can see absolutely everything, and it's 100% monitorable.
Yep.
So that just increases surveillance, which sure is very handy for the government, but you just lose all privacy along with it.
Yeah.
Um,
Yep.
and
And
I don't like that.
yeah, I feel like it's probably where it's headed, though, to be honest.
Yeah,
Maybe not immediately, but within, sort of 5 or 10 years, you can see more and more of a central bank sort of. I mean, in a lot of ways, it makes sense. Like there is some sort of utility to blockchain and digital currency and that sort of thing. But as you say, yeah, it just means that the government sort of knows every single thing about you every hour
yeah.
of the day.
I do like the resiliency and the fault tolerance of it being a blockchain and decentralized. That is great, but the lack of privacy is just something I, at any cost, would not give up. So
Yeah. Yep. Fair enough.
I'd sooner move to transacting in gold and cash than take that up. So,
You become a gold bug all of a sudden.
well, I mean, it looks like those guys had the right idea.
Yeah.
Current price.
Yeah, exactly. They're doing well for once, which is good. Um, all right. So you've given us like obviously quite a bit about your background and what you're doing in the market and that sort of thing. So maybe let's just, like just have a bit of fun and sort of take a step back and just sort of talk a little bit about sort of war stories and, things that have gone well for you in the market, trades, your best trades ever, your worst trades ever, like things where you did things that in hindsight were absolutely stupid.
Yeah,
And I guess, what you sort of learnt from them and that sort of thing.
for sure. Yeah, let's get into it. Um, Trying to think of a pertinent war story. I've got a few, maybe some I probably aren't allowed to share. I mean, the biggest things that I've learned since leaving TradFi is actually more so about the ruthlessness of business, you know,
Okay.
and
Yep.
applying my trading skills to business. Like operating a firm in itself is making trading decisions every day about things that aren't trades on like a very meta level.
Yep.
And the decision to leave the previous setup I had with investors was, similar. It was trying to come up with someone who was an unrational counterparty and try and pick the best decision. And I think the saying "there's no friends in business" is probably the best thing. And it's not illegal to be smarter than your counterparty, as Ewan Sinclair says in his
Yeah.
books. Just it pays to be selfish in business, as
Yep.
much as people hate it. That's probably, yeah. People will be litigious when it comes down to money, and they will be uh, unsavory when dollars are involved. You can't just trust based off gut feel, or I can't. So just
Nah, that's been my experience too. Like obviously I run my own business and um, you know, I, I like to sort of think of myself as a generally sort of kind and honest and sort of reputable person. And sometimes the things that your counterparties will do in business are compared to like toxic flow, like it's sort of toxic flow on a 10 times scale.
Yeah.
And you just sort of think, how can you sort of do this as a human being? But for some reason, because it's business and it's money, it's sort of deemed to be appropriate.
Yeah, I think leaving kindness on the table in business is like leaving stale quotes out in the market. You just open yourself up to just be ripped a new one.
Yeah.
You could be nice as a person, but I think holding your cards close to your chest is the best approach in business, and approach everything rationally rather than with any emotion.
Yeah, yeah, it's absolutely. And I get like a cricket bat to the forehead every, I don't know how, every 6 months or so when I sort of forget that and something pops up and, so I just got a whack in the head and it's like, oh, actually, yeah, I'm not supposed to sort of believe that everyone else in business is going to be um, the way that you'd like them to be.
Yeah.
But yeah, look, it is what it is, I guess. So I mean, in a lot of ways, it sounds like probably your best investments have been, kind of like your, I guess, decision to sort of back yourself, like from what you're saying, like your backstory, like,
Yeah.
taking the job out of uni, like putting your hand up to sort of do some work in Japan, that sort of stuff.
Yeah, I would say so. Saying yes has probably been, my best trade. My best investment has definitely been leaving. Um, I've learned more about, if I went back in traditional finance, I think I'd be a much better trader having done all of this in
Okay.
crypto. I think there's the problem I had is in a large firm, you get a very narrow view and you work on a very specific, very niche pigeonhole problem.
Yep.
And when you come out of that, you have to look at the full stack. I have to look at integrating with the exchange, managing risk. I have to do every single piece myself, even the managing the business and paying, doing payroll and all of those things. There's
Yep.
every single part of it. You get a much broader appreciation of all of the different working pieces, which means that you could do each single bit a little bit better, I think.
Yep.
But yeah, I think I'm in my 20s, so I I'm very fortunate to be doing as well as I am. Have a crypto market making firm, have money under my
Yeah.
belt. Work with a good team. It's pretty fortunate position to be in. So I think taking that risk of doing it myself. We don't have any outside capital, um, so being able to. I mean, I don't discount the role luck has played here. I would never, as Skyquake says on Twitter, never trade luck for skill.
Yep.
Um, but yeah, I think every time throughout my career, this is not necessarily trading. I've been rewarded for taking risk, and so each time I take a little bit more risk. Maybe someday that will blow up in my face, but so far as my career has gone, taking those risks and jumping off the edge has paid off a lot. So that's probably my
Yeah.
best trade.
Yeah. Good for you. Yeah. I mean, I think you don't really get anywhere in life without taking some risk. Um, obviously a little bit older, so some of the risks I've taken have blown up on me from time to time. But on a sort of a net overall, if I hadn't have sort of taken all of those risks on an iterative basis, my life would be very different to what it is today. And I'm pretty fortunate as well. I mean, my life's not perfect, but it's pretty good compared to sort of where I started and compared to others. So, um, just sort of talk to me a little bit about the firm. And obviously, you sort of mentioned obviously you come from an engineering background and the people that you're working with are sort of all coming from a math background. And I assume most of them are sort of relatively young, like in their 20s and that sort of thing. Um, just sort of talk to me, like it actually sounds like quite an interesting sort of collegial environment to sort of work in and be part of. So is that a sort of a fair assessment? And like what's a day in the life of running your own crypto market making firm?
Yeah, I'd say that's true. I actually knew two of the team members, sort of through university. We have two team members who are actually significantly older than me, much closer to 40 than they are to 20,
Yeah. Okay. Yep.
who, yeah, so sort of N+1 to the original two people I knew. So one was in fact my tutor at university, which is
Yeah.
how I
Cool.
originally knew him. So when I was starting, I was, know that I'm pretty green. So having someone to learn from and still develop my skills was pretty important for me. So convincing him to come along was pretty paramount.
Mm.
But we're, I guess, a bit different to a lot of other small crypto market making firms. There's a lot of them out there. They're sort of this sort of small size. They're a lot, most are fully remote. We're all in person, which is pretty different.
Okay. Yep.
So we have an office. Found that the collaboration from being in an office, especially for something like trading, where it's, you're very on the pulse. There's a lot of things
Yep.
that come up, has been like probably a key component to us doing so well.
Yep.
Um, and as far as like every day, it is being such a dynamic market is really quite fun. It's like the loop of the feedback loop is pretty tight between making a change or having an idea, making a discussion, making a change, and getting seeing the numbers come up on the screen is better or
Mm.
worse is like a day or two.
Yeah. Cool.
Sometimes it's longer, but you can come up with some idea of some trade, and then a day later you're suddenly making 5% more money, which is pretty cool.
Yeah.
And so it's this sort of academic, we're doing maths all day, and we're writing code all day, and there's sort of that computer science side where we're all trying to write faster code, better code, stuff that breaks less, runs faster. And then there's also the mathematics side where we're trying to be a bit more predictive, a bit smarter with how we calculate prices and model things.
Yep.
And reading research papers each day of different approaches to different analytical methods and stuff like that. Sort of combining those together, which is nice problem solving environment with that sort of gambling reward feedback of like slapping a pokies machine is a really nice little fusion, I think.
Yeah, it's like a juxtaposition. You've got this sort of really sort of academic, sort of theoretical kind of um, sort of collegial environment, and then just gambling all day long as well.
Yeah, so it's pretty cool. It drives us to do more maths and more code because you get that number on the screen. It does feel like playing on the pokies. We've got a
Yeah,
new strategy. We just slide a $50 in and then have a few slaps and we're up, and it's a great day, and it eats all our money and we don't make any. It's a bad day. It's
yeah. Yeah. So then how do you sort of deal with the bad days? Like obviously there'd be periods where you have a string of, a bad period, or whether it's the FTX blow up, or, something in your strategies isn't working. How do you sort of, I guess, manage and trust that the code and the math you've done makes sense, and you've just got to sort of wait for the wait for it to
yeah.
turn.
We're a lot of the time the way things go bad is they just slowly stop making as much money at some point. It's just dead. But
Okay. Yep.
there are a few scenarios where things will lose money like for a week or two, and you're like, is this it? But then it'll turn around the next week, and it is a bit taxing. And this sort of has it gone bad, or is it just the market? Yeah, I mean, I don't think there's any clear cut way to know,
Yep.
but it is, and the problem is that the risk averse part of you says size down because it's not making any money more. But
Yep.
then it'll come back the other way and start being profitable, and you've just got tiny size on it. It's not worth it anymore. So
Yep.
it's a tricky solution, tricky problem, which we don't really have a solution for. I think the best solution is to always have enough strategies that's not too big of a problem. But there are days where we've had a few days where we're down on everything,
Yep.
or our one main strategy is down, and then the rest of them just haven't made any money. And so you're down like 20, 30 grand for the day. And it's like, looks pretty,
Not a good day. Yep.
yeah, it's depressing. You're down a small family car.
Yep.
But then the
Yep.
next day you might be up. It's sort of, I think it's important just to wait it out a bit. But the only way we can really tell whether we're right or wrong is from P&L. That's the unfortunate perspective.
Yep.
Is like there is no right answer in the market. You can be as right as you like, but if the market says otherwise, you're
Yep.
wrong. Like if the rational person in me would short Aussie property because I think it's overvalued.
Yep.
But you just get blown out. if you did
Yeah,
that.
just get run over.
So yeah, it's a harsh world, but I mean, we are rewarded for taking on those risks, so can't complain too much.
Yeah, absolutely. So then what's your kind of longer term plans? So, like with the firm, are you want to sort of grow and build an empire, or are you going to stay small? And what's your what's your thoughts?
I'm against building an empire. I think that was sort of where we were being pushed previously when we had investors,
Okay. Yep.
and it's not me. I like trading. I don't like managing.
Yep.
It doesn't make any sense. And also, like I think the best metric is P&L per head. If I
Yep.
just sit there managing people and skimming 20% off the top, I don't know how much that success could be really attributed to me. It doesn't feel fair. I'm a bit of a greeny lefty anyway, so the small equitable team makes more sense than me just having this big hierarchical structure and a bunch of people underneath me. Just doesn't work for me. And there's less stress, less people, less stress.
Yep.
I'd rather be making a very comfortable amount of money without any stress than ungodly amount of money with a lot of stress. So
Yeah. Yep. That's fair enough. And that's the trade-off, isn't it? Like I've had that sort of battle with that trade-off in my life, and from time to time I've sort of scaled larger in my business, and comes with a whole series of headaches that you sort of just think, why am I doing this? So you got to find a balance that works for you, and if you don't want to get too far away from what you actually enjoy doing, which to me sounds like trading and being involved in the research and that sort of thing.
yeah, for sure. That is what I like doing. Being a business, I still have to spend time doing all those boring stuff, submitting
Yeah,
maths, doing the accounting bits, and talking to tax lawyers and all the fun stuff. But at the end of the day, bread and butter best bit is the trading, and that's why I left. I was a trader, and I thought I could do it myself. I don't.
yeah,
I
yeah,
didn't leave to manage people. So
yeah. Fair enough. Cool. So it's been really good, mate. It's actually been a really good chat. Um, I guess what advice would you have for anyone that's getting involved in the market, whether it's crypto or TradFi, and whether they're looking at market making or doing some, running sort of similar strategies to you? Um,
yeah,
any sort of advice for people?
I do. I mean, I want people to understand that I'm pretty young and green, so take my words with a grain of salt because a lot of my success has come from luck.
Yep.
Um, but I guess that is advice in and of itself. Um, it's probably just to find a little niche and hammer out your edge. Don't go looking to. I think Robot James said, "Stop trying to play tennis against Djokovic." And I think that's a real fair parallel to play. Go find a little thing where you could turn 20K into 50K.
Yep.
That's 30K extra is going to make you way more. And realistically, the best thing to do with your time is to earn more at your job.
Yep.
Trading is hard. Investing, you can slightly outperform the market with a little bit of effort, but the best way you're probably going to make more money is just working. You know, if you can make money in trading, you probably make a lot of money doing a lot of other things.
Yeah.
Um,
I think a career in trading, like obviously people that have a career in trading are highly intelligent, and it's, they could probably perform very well in other roles. And um, but like although it's a fun way of making money, if you're able to make money doing it, it's also very hard. Um,
it's
and prob
brutal.
Yeah, yeah, it's not for the faint of hearted, and you got to have a real passion for it.
Yeah. And as well, for those that are looking to do it as a job, I don't think jumping into self-employed is the route to go.
Okay.
You know, the amount you'll learn from working at a big firm is huge. A lot of the best knowledge is behind closed doors because there's no incentive for people to share it with
Yep.
you. So learning that way is the way to go. And if no firm will hire you with your current set of talents, then maybe it's time to take a step back and look at where you need to upskill a bit because they don't think you'll make a good trader is the cut of that. And so if
Yep.
they don't think you'll make a good trader, then you should reevaluate whether doing it is the right move to make.
Yep.
You know,
Yeah, that's a
um,
fair call.
if no one else will trust their money with you, then probably shouldn't trust your own money with yourself. So
Yeah, that's probably a fair bet. Cool. Is there anything that you, I guess, wanted to get off your chest or share, or had a burning desire to sort of tell everyone that we haven't covered off on?
Um, I don't think so. Be skeptical is probably the one thing.
Yeah, okay. Expand on that a bit.
Um, I mean, a lot of it comes from you see a lot of absolute rubbish on Twitter of people sharing uh, trade ideas or strategies or whatever. And if they're not explicitly telling you that this is something that used to make money and doesn't anymore, then you can probably file away that whatever they're saying bullshit,
Yeah.
regardless. Um, there's so much bullshit out there because it's just everyone's looking for attention, everyone's looking for your money and your wallet. And also, even just in the markets, if you're looking for an arb, uh, chances are, I'll give you an example. I thought there was an arbitrage on multi token between Kraken and Binance.
Okay.
Turns out that Binance only accepted deposits from Binance Smart Chain, and Kraken only accepted deposits and withdrawals onto Ethereum mainnet. So two different chains for the same token, and they're not redeemable on each one.
Yeah, okay. Yep.
So, you know, if there's an arb there in a liquid market that's not being taken, there's probably a reason for it.
Yep.
Don't get ahead of yourself and already do one leg, which I might have done. um, yeah, being skeptical is probably, markets will reward you for taking risk, but make sure to be skeptical on the way, or else you're going to catch yourself with something blowing up in your face.
Yeah. Fair enough.
Yeah.
Yeah, cool. All right. So if people wanted to reach out, how can they find you? Is Twitter the best place to find you? Look,
Twitter. I'm also on Telegram with the same username. If people
okay.
really want to contact me, you know, business plug. If you want some options market making or some quotes you want us to
Yeah.
stream to your exchange, do hit me up because we can talk about that. Likewise, for anything spot market making, we can talk about that too.
Yeah, cool. All right. I'll post the link to your Twitter handle in the comments after the show. Um, Look, mate, it's actually been a really good chat. Obviously, a lot of what you do is sort of really outside my domain, so it's really been actually quite interesting sort of talking about it and getting a bit of an insider perspective. So thank you.
Oh, well, I enjoyed it too. So
Yeah, cool. Well, I hope everyone enjoyed watching the show. If you did, please like and subscribe. We're a YouTube channel now, so we need to get our numbers up. Just a bit of a plug. And stay tuned for our next episode. Thanks very much. Thanks for coming on, mate. Cheers.
cheers.